Representative Burgess.
Thank you, Mr. Chairman. Dr. Bernanke, welcome to our committee again. I just want to pick up Senator DeMint used the word quagmire. Senator Coates used the term stall speed. And I got to admit, I'm concerned about some of these same things. The vice chair of the Fed yesterday at the Boston Economic Club described adverse shocks that could push the economy into territory where a self-reinforcing downward spiral of economic weakness would be difficult to arrest. I'm not an economist, but that sounds bad. Is that right?
The concern she's expressing is that if growth is not sufficiently strong, that it wouldn't take too much to put us back into
That's correct.
either a recession or at least a significant slowdown.
So I won't admit to having trouble sleeping every night, but what does bother me at night is Lehman Brothers. And that is, when I wake up at 3 o'clock in the morning, that is what I'm worried about. Now, I don't know what the next Lehman Brothers will look like. I don't even know whether it would be in this country or perhaps be in Europe. But I think she summed it up pretty well, and this was reported on CNBC Squawk Box this morning. And I must admit, when they played that clip, it really got my attention because this is one of the things that has bothered me since September 2008. I see a lot of parallels as we cruise into this summer season with the summer of 2008. Now, gas prices have moderated, so perhaps you can move that off the table a little bit. But similar situations, presidential election year coming up, and the economy still in tough shape, hasn't recovered. And we see all this stuff happening in Europe. So you said on page 3 of your testimony, down right at the bottom of the page, you said you're prepared to take action as needed. Can you outline for us very briefly maybe what the top 3 steps are, that action as needed item is that you have there?
Sure. First of all, we are already taking some actions, important actions, notably that we are working to ensure that banks have adequate capital and liquidity. And as I noted, banks are now much better capitalized than they were prior to Lehman, which is helpful.
Can I ask you a question about
Certainly.
that? You're talking about our banks.
Our banks.
Domestic banks.
Yes.
You really can't control what's happening in banks in Europe. Is that correct?
I cannot, no.
And we can't do a stress test. Timothy Geithner can't run over there and do a stress test. Well, if we're asked to help with the situation in Europe, what assurance do you have, or can you give us, or can you tell us that we can give the American people that we're doing that due diligence, or is that help just not available? Is that one of the things that's just not on your within your realm of being able to help?
Well, I think the U.S. government position has been reasonably that Europe is a rich region and that they have the resources necessary to achieve stability. I think the main problems over there are political rather than economic. There's a lot of 17 countries involved, and a lot of different interests. So, you know, I'm not sure there's much that the United States can do other than be supportive and try to provide whatever advice and, you know, verbal help that we can do. But
We can send them a get well card.
Send them a get well card. What the Federal Reserve can do is try to protect our own country, and we're doing that by strengthening our financial system, by making sure, or at least by monitoring on a regular basis, the exposures that our financial institutions have to Europe, both direct, indirect, and how they're hedged. We've done the swaps, which was, I think, a useful thing that we did to help stabilize the money markets, the bank funding markets over there. I think the main thing that we have not done yet, but could do if financial conditions got sufficiently severe, would be to use our authority through the discount window or through our 13.3 authority to lend to financial institutions against collateral to make sure that lack of liquidity was not a reason that they would collapse or at least stop lending. So I think that's the main tool that we obviously have in reserve that we could use and we will use if financial conditions call for it.
Let me ask you this. Are there any U.S. banks whose capital could be seriously jeopardized by what's happening in Europe that then could push a Lehman-type scenario to the forefront?
Well, as I said, we've been monitoring the direct exposures, and for the most part, our banks are far less exposed to European sovereign debt and European financial institution debt than are the European banks, and which is why there's such a difficult interaction between the sovereign debt problems and the banking problems in Europe. That being said, if there's widespread contagion, hard to predict, you know, operating through financial markets, operating through the potential problems of a large European institution, whatever that might be, then we can't really foresee or guarantee that that there might not be serious stresses on some U.S. financial institutions, in which case the Federal Reserve, with the experience that we had in 2008, is certainly going to do what's necessary to try to mitigate that problem. But I don't mean to be represented as saying that there is no problem. There is a risk, and all we can do is prepare for it as best we can.
Thank you, Mr. Chairman. I'll yield back.